What's going on, guys? It's Ricky with TechBud Solutions. So I have our buddy here, JR. We actually just met him. We're both helping out and volunteering at the Houston Food Bank. So we just grabbed lunch, and I thought it'd be a pretty cool thing to actually catch it on video, me teaching kind of a stranger, if I can, on how to trade in the stock market. So we're here in Houston. We're again volunteering for the people that were unfortunately devastated by Hurricane Harvey. So let's kind of get right to it. So I'm going to be sharing my screen, and you guys are going to be able to see everything that we're going to be talking about. I want to make sure that you guys understand that this is not the only way that you guys can invest in the stock market. This is just my approach, and I'm simply going to be explaining to you, what my approach is. I think this could be very informative for the viewers that are watching, because I want to encourage you to ask questions, because I'm sure the questions that you have are going to be similar ones to the ones that they have. Okay. So I'm going to explain to you 3 tips or 3 kind of like techniques that have led to my success, okay? And again, if you guys want to follow and take notes, then feel free to do so. So I'm going to explain the 3 tips, and then I'm going to go ahead and break each and every single one down. So the first one is only trade quality stocks. We're going to go into a little bit of detail for that. The second one is learn the importance of managing risk, right? And then the last one is execution, making sure that you stick to your plan and that you don't break your rules. So let's kind of talk about the first one. And although the stock market is very broad, I think having a general understanding of what these 3 techniques are can give you a bit. There's obviously a lot more when it comes into the stock market, but understanding this and stapling it on your wall or always having it on your side when you're trading can, I think, give you a better understanding on how to trade successfully. So, have you ever invested in the stock market?
No, never.
Okay. Have you opened up a brokerage account or anything like that?
No.
Okay. So what I'm going to do is I'm going to have you actually, after we're done, we're going to have you place a trade on my account.
Okay.
We're going to just buy 1 share, but just so you can kind of see how to place a trade and stuff like that. And then I'll help you open up your account. I'll send you a link so you can get a free. You can get your first free stock and stuff like that. Okay. So if you guys want to get your free first stock, the link is going to be down in the description as well for you. So now let's go into the first one. So only trade quality stocks. So what I mean by that is, are you into cars? You have a Ford Mustang, right? So you're into cars. Okay. The best way that I can put it is to understand that stocks are shares of companies. Really doesn't mean much with that. So let's say you have $3,000 and a stock is valued at $1,000 per share. So you can buy 3 because you have $3,000, so you can own 3 shares, right? So if that stock increases from $1,000 to $1,100, it just saw an increase of 10%. Therefore, from 1,000 to 1,100, you just made 10%. So with your $3,000 investment, you just made $300.
Okay.
Okay. So that's a very general understanding. So you're investing in the stock market to see an increase, right?
Yeah.
So to invest in the stock market, just like if I wanted to buy and sell your car, I want to make sure that I can identify a good price point, right? So I can later sell for a profit. Obviously, stocks move a lot quicker. I'm just trying to give you a general understanding on how to understand how stocks work. So understanding that, let's say a 2015 Ford Mustang hypothetically sells for $15,000. I don't know what it sells for. Well, let's just say it sells for $15,000. You see the overall markets. There's some selling for $15,000, $15,500. Some selling for $20,000. But you can see that at least you can get $15,000 if you were to put it out there, right? Understanding that, let's say I find your car, right? I find that 2015 Ford Mustang for $13,000, right? So there's a $2,000 profit margin. You understand the market. You see the trends on how it's been selling for the past, 6 months, and you see that it's been selling from $15,000 to $20,000. The high point's $20,000, the low point's $15,000. You find one for $13,000. This person really just wants to get rid of the car and needs the money. So what do? You take advantage of the opportunity. You go ahead, you buy the car, you post it for $15,000, and you get rid of it, right? Same kind of approach when it comes down to the stock market. You look at overall trends. You identify the high points, the low points, and you try to buy low so you can sell high. I think one of the biggest things that I can suggest, or that I think has really assisted me in my success when it came down to trading quality stocks, is making sure you understand what quality is to you. So it's going to be different for every single member. I'm going to talk to you about 3 things that I like to focus on. So if you could see my screen right here, something that I like to focus on, and again, don't focus too much because I know this could be confusing, but something that I like to focus on is this RSI indicator, this box that you see right here. RSI indicators can tell you when a stock is overbought. So when it's at this high point at 70 or higher, meaning it's overbought. So it's probably not a good buy. Doesn't mean 100%, but it's probably every time that it peaks out here, it sees a downward trend. Okay, and then when a stock is below 30 RSI, it means that it's oversold. So like that guy that sold it for 13,000, he sold it, way too low. You can buy it at that low price, and then it'll bounce back. Okay, so this thing tells you when a stock is oversold or overbought. So giving you a better understanding if it's a good deal or if it's not. So that's one thing that I like to focus on, making sure that if I'm looking at, let's look at AMD. So AMD is a company, this is more of a fundamental trade. So this thing, AMD is a company that's partnered with Apple. They make the little micro devices. Yeah, you knew that?
Yeah.
I like that. Sweet. Okay, so he already knows more than I did when I started. So do you see a trend here? So looking at this overall graph, trying to trade quality stocks, it usually peaks out here at around 1320, right? And it sees support. So a support is usually where the stock bounces. It usually bounces at around $12 to a little bit below $11, right? It bounced here and hits highs of 13.20, right? Comes back down, bounces here at around $12, hits highs of about 13.20, right? That's a trend, right? It bounces here and hits a peak there. Where's it at right now? It's at around like 12.92. That's kind of high, don't you think? Yeah. So what I think I would like to wait for is for it to get to a lower price point, around like $12, because based on previous trends, based on these previous one bounce and two bounce, it usually bounces there. But I want to make sure that I get it down here. So if I buy it at, let's say, $12 and it goes back up to simply $13, I would have made 8.27%. So with $10,000 on that trade, I would have made $827. Okay, so 8.27%. That's the potential for profit that it has. So when looking at the stock and trying to trade quality stocks, you want to make sure that you understand the trend. So the low points and the high points. So understanding that, we could see that $12 is the low point. Is it at that $12 price point right now? No. So what I'm going to do is I'm going to simply go over here. I'm going to right click and then I'm going to set my alert. So it's going to alert me when this stock goes below 12.44. I really want it to alert me when it goes below 12.20. So I'm going to do that and simply set it. Until then, I'm not really focused on it. I know it has potential, but it's not at my not at my price point right now. So let's move on to something that might be a better buy. A better buy right now can be something like JNUG. So JNUG right now, it saw a pretty downward trend. So let's look at 180-day analysis, and we could see that this is going to be a little bit different. But if you could see, it spiked up all the way up here to about $26, saw a huge downward trend, and then if you could see here, it almost looks like, but you can see that it's almost seen an upward trend, right? Okay, so with that understanding, I had another pullback, but if it continues this upward trend, so if this stock breaks above this blue line, that's my EMA line, that means that this stock is going to start trending back up. At least that's what that indicator is. So if it breaks above the EMA, it's exponential moving average. I know that means nothing to you, but what it means is, you see how when it was trending up, it was holding above the blue line, and when it went below, it started going down. So it's that simple understanding that, okay, look, it's about to break. If you see, it's already crossed, but it unfortunately went below. So if it comes back up and it holds above the EMA line, then we have the potential for this stock. If you buy in when it crosses around here, from 2050 to highs of $26, the potential is 28%. So with $10,000, that's $2,800 profit. Okay, that's the potential. So therefore, this is a better understanding of a stock that all you're going to wait for is for the break above the EMA line. So I'm going to set my alert, and it's pretty close to it. It's about $20 that it needs to break above. So what I'm going to do is I'm going to set my alert for it to go above 2020. And when it does break above 2020, I'll look at it again, see if it's actually trending up. And I know I'm getting in. I've identified this margin, right? $20 to 26, right? And I know that it's trending up, so we're seeing signs of upward potential. And then therefore, it's more of a quality stock because it's meeting certain criteria that I like to focus on. The first one is the RSI indicator. The second one is volume. I'll talk to you a little bit about that one. You want to make sure that the stock is healthy, and obviously it's in the top of my list. So what that means is it's moving around a lot, so you don't have to worry too much about volume on JNUG. And then the last one is that it's seeing upward momentum. So the EMA line helps you see an upward trend. So based on what I like to do when it comes to swing trades like this, I like to focus on stocks that I identify a profit margin, and when I do, I try to buy at the low point, wait for it to break above the EMA so it starts trending back up, and when it does, then I set up a plan on where to buy, when to sell, and where to cut losses. So let's move on to this Second one, so we talked about indicators, we talked about patience, so and then to not force your trade. So what that means is patience. So if you're swing trading this stock, like, let's say you would have gotten in when it did cross above 20. It saw a huge drop all the way down here, right? There's a thing called cut-in losses, and I'll talk to you about that one in just a bit. But I think one of the really important things that you should understand is, when I talk about being patient, is that you make sure that you give the stock the proper amount of time for it to perform, from it to go to $20 to 26. Do you think it can go from 20 to 26 all within one day, when it took these black bars are days? So do you think it can go from 20 to 26 in one day when it dropped from 26 to 20 and it took about 10 days? Is that realistic for it to go up? No, right? If it took 10 days for it to see that downward trend of 28%, for it to bounce back up, you have to be realistic. Okay, I'm catching it at the low point. It's going to be about the 10 to 12 day, hold, and I'm going to let it, play out the way that I expect it to, while I'm managing my risk. So when I talk about being patient, making sure that you don't force a stock, making sure that, if the stock doesn't meet all your criteria, then don't force it. Simply don't trade it. A lot of traders sometimes make the mistake. Once you join our group, you're going to see people making it like tens of thousands of dollars, and you're like, crap, if I would have jumped into it, is it too late to jump in? If they're already locking in profits, then it's probably too late to jump in. When it comes down to trading the stock market, especially momentum trading, it's all about getting in early. And when members in our group start locking in profits, and most likely based on history, it's already at its peak, and it's going to see a downward trend from there. So you want to make sure that you listen to hype, but that you don't follow it, that you trade quality stocks, so understanding the low points and high points. And the last thing, when it comes down to my rules, is it's going to be, the next thing is going to be managing risk. So losses smaller than your gains. So what I mean by that is, if you start with $1,000 and you're in this market to make money, does it make sense to you, realistically, does it make sense for you to, if you're taking the $1,000 and you're investing in a company, and if you're losing 10% every single time you trade, and you make 10, or you make 5%, is it realistic for your account to grow? If you're taking 10% losses and your gains are 5%, you'll be in the red. You'll be slowly losing money. So what I like to focus on is the importance of risk management. Is when you invest in companies, not all of them are going to be green. You have to understand that, right? People sometimes have a 50 to 70% success rate within our group. And what's the best way to succeed with that? The approach that I like to take is, I'm a very conservative trader. So did you see how we've identified this margin of profit on JNUG from 20 to even lows of 19, so like $19 to highs of 26? So you're going to try to buy in at the low point, but if it breaks below a certain price point, you want to make sure that you keep those losses small. I try to keep my overall losses at no more than 3%, because if my profits on average are from 5% to 10%, then I want to make sure that my losses are smaller than that. So I can take 3 losses and 1 green trade, but I'll still end up, my week on the green now, right? And that's one of the most important things. If you learn anything from this thing and you start investing in the stock market, you need to learn the importance of risk management, making sure that your losses are always smaller than your profits. Because even if you have a day or a week that's all red, because you can day trade 3 times within a 5-day period if you have less than $25,000 in your account. So even if you take 3 red trades, next week if you just take 1 green one and you lock in that 5 to 10%, you'll either break even, if you keep your losses at like 1 or 2%, and then your profits at about 5 to 10%, you'll either break even or you'll be in the green. And you have to learn the importance of, regardless of what it is that you believe in that company or how much you hope that it goes up, you have to understand the importance of cutting losses. And that's what has to be one of the most important rules, because so many new traders don't just think that they can invest in the stock market and that they won't lose any money. And that's definitely not the case. 90% of traders lose money and 10% make money. And the only way that you can make money is if you can minimize your losses, just like a business, right? You want to minimize your losses and make sure that your profits are always larger. And even if you have consistent losses, that they're always smaller than your profits. So now, when it comes down to risk management, it's very simple. Something that I like to do, and I would like you to, every time you take a position, before you take a position, you understand where you're going to buy, where you're going to sell, and where you're going to cut losses. So already before you take the position, let's say you are investing, let's say $10,000, right? Right as you set your position, it's called a stop loss. It's an order type. So right when you set your position, you send out the order, it gets filled, so you own, let's say 100 shares of a, $10 stock with the $1,000. Something that I like to do right as I get filled is I set my stop loss, meaning that right away when I get filled, like let's say I were to take a position right now at 1874, like this thing's dropping so hard right now. So obviously it wouldn't be a smart idea to invest in something that's seen a huge downward trend. Understanding that, the approach that I would take would be like, okay, if it starts climbing back up and I get in at like, let's say $19, I'm going to manage my risk at like 3%. So therefore I'll do the math before I take my position. I'll do the math. What is a 3% loss? How many cents am I losing? Or, what is it that I'm losing? And right as I get filled, there's a thing called a stop loss, meaning that you put that order right away. So if that market price, if the price of the stock drops below that price of 3% from where you bought at, it will sell your position automatically. Therefore, although you are investing $1,000, you're really just risking $30, 3%. Therefore, you feel much more comfortable, when you're trading, that all of a sudden if the stock, takes a dip, or there's like some news that comes out that's bad news, you're only risking $30. So therefore, before you take the position, the whole emotions of like, oh man, I have $1,000 invested. Well, I really just have $30 at risk, right? So the thing that I like to think about it is like, let's say for this stock that, you're taking a position and it's, you buy in with $1,000. You want to manage your risk at like, 2%. And you see that, when getting into this, you want to make sure you have an understanding of a profit to risk ratio. So what I mean by that is, okay, if I buy in this stock right now, right here at like, 1874, and it goes back up to $26, it has, as you can see right there, 38.65% profit. That's huge. If you understand anything about like the market, that you can do, if you can gain that within 10 to 15 days, that's huge, right? So for potentially making almost 40%, what are you willing to risk? Well, for 40%, I might be willing to risk my full 3%. So understanding that on paper or on your computer, before you buy in, you're going to put where you're going to be buying in, where you're going to be cutting your losses and the percentage that is, and where you're going to be selling, where you hope to sell to be locking in the profits. And then you're going to have what the numbers out of your $1,000, what that figure comes out to be. With the $1,000, risking 3%, that's $30. Making almost 40%, that's $400 with $1,000, right? Therefore, you'll have that all written down. So before you actually take the position, you'll know in what you're buying, the risk involved, and what your potential for profit is. Therefore, hey, this is going to require, maybe 2 hours, because I'm going to continuously follow up with the stock of my time. Is it going to be worth the risk? Is the 3% loss of me losing $30 going to be worth the risk of potentially making $400? Do you think that's a pretty good, right, risk/reward? So you want to make sure that the reward is much greater than the risk. If a stock were to be like, okay, well, it has a 3% potential for loss and a 3% potential for profit, that's a 50-50 risk. It might not be worth it. So when trying to trade quality stocks, you break them down just like we did with knowing where you're buying, knowing where you're selling them, knowing where you're going to be cutting your losses. And you see, hey, look, I just did this for like 5 to 10 stocks. Which one offers the most opportunity? The highest, rewards for the risk involved. So with that simple understanding, you should be set to go. And then the last thing, we understand the importance of trading quality stocks. We understand the importance of managing risk. The last thing is execution. One of the biggest things that gets into people's heads is the lack of confidence, trying to, oh no, I don't want to cut losses, because the easiest way that I can put it for you is they start breaking the rules. Where they had their stop loss, they remove it, and they hope that it bounces because, they don't want to sell. They don't want to cut their losses. One of the worst mistakes that you can make, if you start breaking your rules, or you start trading stocks that don't meet your criteria, if you start trading stocks that, you don't really see value in, but based on other people's opinion, or you start trading stocks without planning, then you're kind of just shooting in the dark. And this is not a market where you get lucky. And you might get lucky once or twice, but I can guarantee you, if you want to do this as a job, right? You working a normal job and then you doing this on the side, wouldn't it be nice making like an extra $1,000 a month, right? If you could, that's $50 a day. So what that means is if you're trading with like $3,000, it's a very small percentage gain that is that you need to see, right? Therefore, the best way to do it is to learn the importance of how to find quality stocks. You setting up certain criteria that you want every single stock to meet before you invest in it. Making sure that you set up a plan and manage your risk for each and every single stock. And then the last thing is simply, sticking to your plan. So when you formulate your plan, regardless of what happens, you want to make sure that you stick to it. You know where you're buying, you know where you're selling, you know where you're going to be cutting your losses, and you don't break your rules. With that simple understanding, if you keep losses small and you focus on, consistent profit, and you lock in that profit, one of the most important things, then you should be in the green. So I'm going to go ahead and let's see if we can. Do you have any questions for me right now?
Okay, so basically you like to sell whenever it gets up when it peaks.
Yeah, so you identify the low points, the high points. So right when you buy, you write that down, where you're buying, where you're selling, where you're going to be cutting your losses. And understanding that, okay, look, I'm going to buy here. When it hits that peak or when it hits close to it, you might want to lock in profits because it might not hit it exactly.
Yeah. I got you.
So something that I've been looking at is EFX. EFX is Equifax, so it's how they run. I'm sorry, it's this one. It's how they run your credit score.
Yeah.
They had there was like hackers that stole like millions of social security numbers, so it was really bad news. And it went from $140 all the way down to $89. That's about 35% loss, and you can see that it's almost coming back up, right? So understanding that this might be a good stock to buy in now, which then you can later sell for a profit. Okay? Yeah, right now it's at $94.68. I think that's going to. So right now it's at $9.68 per share.
Yeah.
So it's a higher price stock, right?
Okay.
But the potential or the risk/reward might be worth it. So if I get in right now at like $9.66 and I stop loss out at the lowest it's ever been, I'm risking about 5.3% for the potential to make
it's
almost 35%. So with $10,000 being able to make $3,500 to losing $500. So the risk/reward might be there, and that's. With that simple understanding, you just break it down. You make it easy. Do you see a trend here? Do you see it was trading up here because of the bad news? It was way oversold. This is a really good quality company. They just made a mistake. So most likely it's going to take some time, but they most likely will recover and it'll come back up. So there's this profit margin of 35% that you're able to take advantage of. Is it worth the risk for you? So just try to make sense of it. And if it's trending back up, you don't just want to get into it when it's falling, but you want to make sure that it identifies a support where an area that it's bouncing. So do you see that little curve?
Okay.
Do you see it? Do you see how it's like starting to curve back up? It has not gone lower than 89.60, and it's been trending up. Where I'm going to wait for the break above the EMA, and when it breaks above that, then we have a better understanding that it's trending up, and I'll probably have about 30% profit left. And with that simple understanding, 30%, I invest $10,000. It'll probably take me a week or a month to get there, but I can make an extra $3,000 with that initial investment. I didn't do anything special. I looked at a trend, looked at the potential that it offered. I set up a plan, I managed my risk, and I went for it. So it could either be a $500 loss for my month or a $3,000 profit.
So
right?
That's a bigger game.
Correct. Yeah. And this one's a good one. So let's now look at maybe something that's a little bit of a lower cap stock. So let's look at. So RAD is this is Rite Aid. You know what that is, right? Rite Aid. It's kind of like they have it in California. I'm not too sure if they have it here. It's like a grocery store. So it's a huge downward trend. This thing has a very common trend if we look at a 20-day analysis. Let's even look at a 180-day analysis. After it had really bad earnings reports, you can tell like all these traditional old companies aren't doing very well because of like Amazon and all these online companies. But this thing has a very common trend that it bounces at 220 and it peaks out at about like 275. So again, it bounced here at 220 again, it bounced here at 220 again. It peaks out at like 270, 275, and then again sees another downward trend. Hit lows of like 226, and again it's heading back up. So it's a very common trend. So with this, what we can do is as more of like a swing trade, this thing's been trending up. The risk/reward isn't going to be crazy, but this is a company that, let's break it down. Right now, it's heading back down. This is VWAP. I don't want to get too much into that. It's just like an indicator. You'll learn a little. I have videos on that. But it has the potential for it to go from 230. Like if we wait around 240. We can sell anywhere around from 240 to like 270 because that's where it is if it continues trending up. Understanding that it offers 11% potential for profit. Okay, and the potential for loss, the overall support is at 220. Therefore, if I get in at 240, it's about 8% potential for loss. So that's a higher loss than I would feel comfortable with. But we're only going to buy one share. Okay, so let's go ahead and we'll go ahead and take a position on it. And then this is my Robinhood account. I don't really use it anymore. But let's see. No, let's see. Okay. Okay, so we'll go here on RAD. You're gonna click buy. I'll have you do it. Buy. You go to order types because you want to make sure that you buy at your exact price point. So look at this trend right here. We have the VWAP, which usually indicates where it bounces at. It's going to be around 238. I would feel comfortable buying in at 240. So put limit order. Limit order means that you buy at your exact price point. So you did it. Limit. Type in $2.40. Click continue. So right now the market price is at 234, but it's falling, right? And I want to make sure that I buy it where I want to at 240. So there, you did it. This is time to enforce. We can do good until cancel. That's 3 o'clock today. That's when the market closes.
Okay.
Oh no, let's do 3. Yeah, click continue. And then click on share orders. Share of orders, how many do we want to buy? So how many can we buy? I just sold like very few. So let's say it says we can buy 6. So let's go ahead and buy 6. So 6 shares. Click review. So now it's saying, shares of RAD, 6, limit order at 240, and estimated cost is 1440. Swipe up, and now you just placed your first trade. Yeah, so now you just place the position, they're going to receive it, and once the market price falls to that specific price point, then you will get filled.
Okay.
And if it doesn't hit 240 exactly, and if no one sells at 240, then you won't get filled. But if it hits 240, you'll get filled there. And, we'll wait for it. This will probably be a 2 to 3 day hold. But then from 240 to 280, that's about, let's just say 270, it hits there. That's 11% potential for profit. Obviously, this isn't huge. I mean, we bought 6 shares of it. So that offers from 240 to 270, that's 30 cents. So 30 cents times 6 of them, it's $1.80. But it's with $14, you made $1.80. I mean, that's 11% profit. So that's it. It's with that simple understanding that, if you know how to identify a margin for profit, then you can break down a stock, then, you can take advantage of opportunities. So this application, like you just saw, Robinhood does not charge commissions, so you can download the app. Commissions, what I mean by that is, if you use this brokerage that I'm using that I'm filming with right now, this is TD Ameritrade. They charge you $5 for an entry and $5 for an exit. If you're trading with $15, that's not going to be worth it for you, right? Because you're going to pay $10 already in commission. So something that a lot of our traders do, that if they have about $1,000 or $2,000 when initially starting out, they want to go with a non-commissionable brokerage company because they don't want to pay all these fees. And understanding that, I'm going to send you the link so you can download this. You'll get your free You'll get a free app when you download it. So you'll get like $3 or something for signing up, depending on how lucky you get with your app. But then you can start trading. So I would suggest just to leave that app, and if anything, in the very beginning, even do paper trading. Paper trading can allow you to trade with fake money, and that's through TD Ameritrade. I'll talk to you a little bit more about that. And understanding that, you'll test the waters, see if you are profitable, and if you are, then you can invest real money in it, and then you can start doing it full time and stuff like that. Okay. Again, I want to thank you again for letting me explain to you kind of like how it works and what it is that we do. But for all those that have any more questions, feel free to click on the link down in the description. It will take you on over to the TechBud Solutions Facebook group. And once you make your way over to the Facebook group, you'll see that once you get accepted on the top pinned post, this is the Discord group chat, which is a real-time group chat. Like, we don't post too much on the Facebook group. We have a couple posts, but like it's not real time. So understanding that, I'll send you the link for all this. This is the main group chat link. You're going to click on that. You're going to download the application. This is where you can schedule a one-to-one video call with me. If you ever have any questions and just want to have a one-on-one call with me, this tells you the step-by-steps on, I'm Ricky, that's Brad, so he's right there. And then we have Connor and Kyle. These are our group leaders. This is how every ticker symbol should be posted. So it should be the ticker symbol, which means a ticker symbol means like RAD, R-A-D. That's how you search the stock. And then the rules, and then talking about the purpose of our group and stuff like that. Once you get accepted, you'll be in the Discord group chat, and then you can share ideas, listen to people, and network with the thousands of traders that we have within our platform. Okay, so thank you guys again so much for watching. All the links are down in the description. If you guys have not ordered your Technical Solutions t-shirt, I do want to let you guys know that they are now available. I do want to thank JR again for allowing me to kind of showcase what investing in the stock market is and kind of like the very basics. So I hope you guys found this video helpful. If you guys did, please feel free to give it a thumbs up. And if you guys can share this video with someone that you think can benefit from it, then please feel free to do so. We'd love to have you as a part of the team. And like always, guys, continue working hard, continue following your dreams. Let your passion be what drives you in your success. And like always, we'll make sure that we end the year on a green note. Take care, team.